Hey everyone, Jeff Dorman here again on a beautiful Monday here in LA doing That's Our Two Satoshis Live. I'm joined again by my colleague, Hassan Bassiri. How are you, Hassan?
Good, Jeff. How are you?
I'm good. All right. Last week was a little bit of a rough one for digital assets. We haven't seen that in a while. I don't know about you, but I talked to a lot of our dealer friends, a lot of the OTCs, a lot of the research guys. Nobody had a great explanation for what drove this. I'll read off a couple of the ones I got from the street. I'm curious if you think any of these actually led to a lower market. So number one, continued concerns about inflation. Two, the SEC rejecting VanEck's proposal to launch a spot Bitcoin ETF. Three, Bitcoin's Taproot upgrade being a little bit of a flop. Four, China again cracking down on miners. I guess continued banning of bans that already exist.
Right.
Or five rather, Biden signing into law the infrastructure bill. And six, just the dollar jumping to a 1 year high. Any of those, do you think, reason for the sell-off last week?
Maybe the dollar, but other than that, I don't really see a strong catalyst. Someone put out a good tweet on looking at all like the growth stocks, everything from like Snap to Twitter to Lyft to Palantir to DraftKings, and they're all kind of pretty deep discounts from their high. And Bitcoin as a growth asset could be a proxy for that. Maybe there's a lag on a week, but to your point, not really seeing much.
Yeah, seeing the same thing in crypto stocks. We had October was a huge month for all of them, from Coinbase to Galaxy to even Backed, which is barely even exists, but ran up to almost a $10 billion market cap. The miners did great, but all that reversed so far here in November. We're seeing double-digit declines across the board in the crypto stocks, in addition to the tech stocks. So I think all of that is related to the inflation fears and certainly the rise in the dollar as well, right? Where technology would take a backseat to some of the more defensive sectors. I think it's too early to tell. What I think is interesting, though, is, and we put a chart of this in the Two Satoshis write-up that we released this morning, but it is just still amazing to me how fast this market goes from greed to fear, right? Everyone just euphoric about the market, and then you get 2 days of negative or sideways price action, and everyone throws in the towel. So I don't know, but you told me earlier, we were talking in our risk committee. A lot of things reset, right? A lot of the sentiment indicators from funding rate and leverage. What'd you see there?
Yeah, like one thing that's very interesting is, we use the funding rate as a barometer for retail. And so what you'll get is in times of bullishness, the funding rate goes ham and, it's annualizing between 50 and 80% to be long. And in times of, retracement or crab market, like right now, Bitcoin's down, 5-10%, all the funding rates are slightly negative. And it's not egregious to short yet. Like you're not paying that much money. I think it's annualizing around like 15 to 25%. But I just think it's just a normal market move. And in general, like if you counter trade retail, you do pretty well. So, I mean, we're less than 15, we're like 18% from our all-time high right now. I don't really see, monthly inflows are super high. Don't really see a reason to be super worried. But yeah, that's how the market works. It's either going to zero or it's going to 100,000 up in Bitcoin.
Sure. Yeah, I thought it was interesting too. I mean, obviously Bitcoin was down over 10% last week. Ethereum was down over 10% last week, but there was still quite a bit of dispersion in the market. I think I might die on this corner talking about how these different assets are all have different inputs and outputs now, and it's not just one macro trade. But of the coverage universe that I look at, a quarter of tokens were still up. Many of which were up double digits last week. So certainly things like Avalanche, which was up 50% last week, Sandbox, which continues its tear, up 67% last week. But there was a variety of different tokens from layer one protocols to layer zeros to gaming, Web3 that kind of bucked the trend and was up last week. So to me, that's the most indicative of a healthy market, is when you actually still see that dispersion. It's not just everything up or everything down. So I'm not seeing the warning signs. I think the excuses for why the market was down last week were just that, excuses. And truthfully, nobody really knows. It was just a time to reset the market, and we'll see where we go from there. But let's talk real quick about inflation. The second section of what we put in Two Satoshis was actually written by another colleague of ours, Nick Holtz, who wasn't able to join us today. But there's been a lot of talk about inflation, and I think in general, There's a lot of people who are being trained on Twitter University in economics and probably have the wrong idea about inflation. But a little bit of inflation is a good thing. A lot of inflation is a bad thing, right? When you see a little bit of inflation, what that means is your household net worth goes up, real GDP goes up, your income goes up, poverty collapses, life expectancy goes higher. These are all good things, even if the purchasing power of the dollar goes down a little bit. But it's only when things really, really accelerate and get scary, when it erodes all of your purchasing power, that's when things get bad. But all the data that we're looking at, and for those who don't know Nick Coates, he was worked at a macro fund before joining Arca. What's interesting is we like to put this into quadrants of whether or not it's a good bullish backdrop for digital assets. And even though we've seen these strong month over month and year over year CPI prints, it actually puts us back into one of the best quadrants for investing. We're in that inflationary boom scenario where growth is up and inflation is up, but not out of control. So in that market environment, and I'd encourage everybody to go to our blog at ar.ca and read this week's Two Satoshis, because we have a pretty good chart in there. But in this inflationary boom environment, it's pro risk. You want to be long energy, you want to be long financials, technology, and especially digital assets. Using Bitcoin and Ethereum as a proxy here. Here's the annualized monthly returns during an inflationary boom. Bitcoin up 122%, ETH up 170%. So this may not last forever. If inflation continues hot and then we start to hit tougher comps next year, we might get back into one of the worst quadrants, probably in the second half of next year. But for right now, all signs are pointing to a pretty bullish backdrop. So based on what you've read from Nick, based on what we've been talking about here, Hassan, what do you think is in store for us for the next couple of months here?
I mean, I'm still adamant that I think this is just a normal retrace. Like, I don't see anything that's super scary, especially when the funding rate's down. People are talking about like the open interest as an issue, which is totally fair. Open interest is still high, but I still I'm on team Nick. I think you want to be long risk assets here, at least through the beginning of Q1, and then you can reassess. But I think inflation should be or whether it's transitory or not, should be a catalyst for Bitcoin. I think the counterpoint to that is people would tell you that people that could foresee inflation coming and got into Bitcoin last year, it's worked, right? Like, they got into Bitcoin 15, 20,000. They've ridden this wave up. They've seen the inflation coming. And now, with regard to what you bought in Bitcoin, you're 5 times wealthier. And now that's coming off. So it's tricky, right? It just depends on your time view of like when the inflation's coming and when you put the trade on. But yeah, to your point, I think we're fine. I think it's a good time to be long.
Yeah, I agree. I think it's interesting. I was looking at some numbers just last week, trying to figure out what happened just over a longer period of time. And if you go back to the first 4 months of the year, we're super bullish for digital assets. Since then, it's been a mixed bag. Bitcoin is down about 2% since May 1st. Over that same time period, ETH is up about 50%. DeFi is down 30 to 50%. CeFi tokens like FTX and BNB are largely flat. And then you have the layer ones up anywhere from 100 to 1,000%, and you have gaming NFTs up anywhere from 500 to 1,000%. So
Right.
I was pretty surprised by that Bitcoin literally hasn't done anything in 6 months, despite all these different things happening around it, and with these higher inflation expectations being built into the market. But anyway, we'll see. I tend to agree. I think I track 26 different indicators to just give me a little opinion on whether or not we're heading into a bullish, neutral, or bearish environment. And right now, of the 26 indicators, I see 11 of them screaming bullish, 12 neutral, and only 3 that are really bearish. And the 3 that are bearish are, as we already mentioned, strength in the dollar, a little bit of a higher correlation between digital assets and the S&P. I always think that's a little bit of a bearish signal when you start to see high correlations with macro assets. And then the grayscale discount, which at this point we probably should even take it off of our risk factors, because I think that discount will be persistent forever. But I really don't see a lot, and there's not a lot that's flashing red. Usually, right before a pronounced sell-off in the market, a lot of these indicators are flashing red, and I'm not seeing them right now. So, with that in mind, in my opinion, looks like a pretty good time to stay long into the end of the year, and it sounds like you agree as well.
Yeah, no, I think one thing that's interesting is people are talking about. This kind of validates you with regard to Bitcoin not being a safe haven. I think as the entrants to the market increase, and as the financial acumen of these entrants increases too, the assets will decouple and decorrelate. And you're seeing that obviously in short time frames, like with regard to the metaverse tokens right now in Bitcoin. But I just think Bitcoin people still are trying to figure out what it is. Is it a risk asset? Is it an inflation hedge? Is it a store of value? But people know, or people want to be long other tokens. Like, you have SoftBank buying Sandbox tokens and things like that. So with time and new entrants, I think you're going to see correlations break down, and you'll see like what you think is a healthy market. Dispersion of return.
100%. Yeah, I think that smooths it out for sure. I have a conspiracy theory. I actually think in about 2 months we're going to hear that some very large macro fund blew up. Just the way the price action happened last week with no seeming no real catalyst. We've been reading headlines for the last 3 months about macro funds down 10%, 20% because the volatility in interest rates has been killing them on their short bond trades into the inflation. The moves in the curve, as well as obviously a strong move in the dollar. I think there's a couple of macro funds that got caught short, and I wouldn't be surprised if one of them has been unwinding Bitcoin and Ethereum, and that led to the sell-off. But like most conspiracy theories, we will either never know or we won't know for a couple of months. But mark that down, November 22nd. I'm calling that some large macro fund is unwinding right now.
Okay.
All right, let's move on to what I think is the most interesting part of what we wrote yesterday is the continued financialization of this market. So, you come from a long, multi-decade career in traditional finance. I do as well. Many people here at Arca do. What do you think about all the things that have happened in the market just in the last week alone, from M&A to Constitution DAO to some of the corporate actions? And I'll tee you up with some examples. So in terms of buybacks, you have the Fay Tribe buyback. You have Nexus Mutual getting a governance proposal to buy back WNXM. In terms of M&A, you have Gnosis trying to buy XDAI. You've got Mango, looking to acquire the team from Psi Options. And then in terms of restructuring and private equity DAOs, you have what Pleaser DAO did a few months ago with the NFT that they fractionalized. And then, obviously last week with Constitution DAO trying to grab a copy of the Constitution. And then you could go into the curve wars as well if you wanted to go deeper. But what do you think about all this? You think as a former TradFi guy, who's been in digital assets now for 5 years, like myself, what do you think about all these different scenarios that are happening that are maybe more common for traditional debt and equity investors?
I definitely think it's a sign of maturation in the market, because these protocols are realizing that your balance sheet is a weapon. Like these tokens that you printed out of thin air, they can be used as a financial asset to acquire and create synergies and like improve your balance sheet. And I think, it's not a direct corollary, but like this whole DeFi 2.0 concept with protocol controlled value, and how, when you contribute assets to a protocol, it's the protocols, it's not yours anymore. And in exchange, you'll get tokens. I think they're taking this concept a step further and saying, okay, well, now we have these assets on our balance sheet. We have, the stable coins, or we have ETH. How can we use those assets to acquire other networks, and what's the value accretion from that? Does this make sense? And is it a real merger and just not something in name? I mean, I know Wi-Fi was acquiring, Pickle and a couple other Rant Cover and all these other ones. That was just kind of like a acquisition in name. Whereas, Fay and Tribe and Fay is literally trying to acquire RGT tokens. And, DAOs are putting together funds to acquire ETH and then acquire an asset, and then you get to have a say in that. I think it's super interesting from both a DAO perspective and financial perspective, as well as like a DeFi 2.0 perspective. And that's what you're saying.
Yeah, I think this stuff's super interesting. I think, we drop everything at Arca every time we see one of these events to see if there's something to do. And quite frankly, it's been a little bit more challenging to find obvious investment plays with some of these moves. But I think it's just the beginning of what we're going to see. I think the buybacks are super obvious, right? When you have cash on the balance sheet and you have a token that's trading below your book value, that's a natural accretive thing to do, to buy back some of those tokens. And if nothing else, you at least create a little bit of a floor and reduce some of the volatility on your native token. The M&A is a little harder, right? As you said, it's hard to understand exactly, what the pro forma entity is going to look like and whether or not that's accretive to either side or both. I think we're going to have to see a lot more of those before we see something that's truly successful and kind of paints a blueprint, I guess, for future M&A activity. But for me, the most interesting one is the restructurings. Like, I still think what Pleaser DAO did, fractionalizing the NFT and selling it. I don't remember exactly how much they made there, but it was a fortune, right? They bought the Dogecoin NFT for $4 million and fractionalized it into
for like
17
20 million,
billion.
yeah.
It was a crazy number they got, and it was in a short period of time. And then, Constitution DAO last week assembling, 17,000 unique Ethereum addresses to raise 45 million bucks.
Yeah.
If we can start to do that as a market, start to coordinate and raise funds that quickly to buy, whether it's assets or to to bid on auctions, I think this is the future of capital raising, and it's going to be pretty awesome to see what happens in the next 12 to 24 months in terms of what's going to start getting controlled by these DAOs. So if you're a traditional finance guy looking at this space, you don't need to necessarily chase cryptocurrencies or chase protocols and platforms. You can dive right in, put your M&A hat on or put your restructuring hat on and look at some of these things going on. And it's super cool. So you might not know it looking at Hassan, but he used to be a full metal jacket. He used to be full metal jacket every day, suit and tie every day, doing M&A, and now look at him running the digital asset world.
Yeah, I came to the dark side. I'm very happy I did that.
So. Well, great. Well, Hassan, as always, thanks for joining me, everyone. That's our Two Satoshis live every Monday. Join us tomorrow for a special edition. We're actually going to be going through Arca's new taxonomy for digital assets. So special edition of Twitter Live from Arca tomorrow at the same time. Appreciate everyone joining.